Before we begin the presentation today, it is important to understand that this material is presented for educational purposes only, and that UBIT Professional, its representatives, officers, affiliates, and clients have not been engaged in rendering specific planning, investing, or professional services. Questions relevant to your specific tax, investment, accounting, legal, estate, or planning needs should be addressed to practicing members of those professions after fully disclosing all relevant and material facts regarding your situation. Because of the technical nature of this material and the fact that the laws are ever changing, the assistance of a competent, qualified professional is recommended when implementing any ideas discussed today. UBIT Professional and all its affiliates, representatives, and officers do not provide any legal or tax advice. We provide education on topics related to unrelated business income tax and recommend that you work with a professional as to your specific tax needs. Thank you.
You might be asking yourself the question, what is unrelated business income tax, or UBIT for short? And does this affect my retirement account investing? To answer this question and further expand on this little known and widely misunderstood tax, we have developed this short instructional video. First, there's no reason to be fearful of UBIT or consider UBIT as a threatening tax. In fact, you'll learn throughout the training that UBIT's not so bad, it's not illegal, it's just simply a tax your IRA pays when using debt leverage to purchase property or engages in a business that does not pay corporate tax. Investors who are debt financing real estate acquisitions and investing in operational businesses oftentimes embrace the UBIT tax as they understand the taxation process and they can make financial sense out of it. Investors every day miss out on incredible opportunities because they fail to take the time to understand UBIT and how UBIT generating investments can still be quite profitable. We will show you how this tax can be beneficial to you as an investor by potentially diversifying your portfolio and allowing you to increase your buying power, investing in a wide variety of alternative investment opportunities. So first, let's discuss leveraged real estate purchases with an IRA or other tax-exempt investment account. When referring to UBIT with debt-financed real estate, we use the term unrelated debt-financed income, or UDFI for short. When your IRA borrows money to acquire a property, the IRA is responsible for paying taxes on the profits attributable to the debt finance percentage. In other words, the percentage of the profits that are subject to taxation is determined by the percentage of the property that is debt financed. You are also permitted to write off depreciation and other operating expenses on a percentage basis as well. And this can significantly reduce the income subject to taxation. Many investors are surprised when they learn after they perform the calculations that their tax exposure is minimal or that they can actually carry forward a loss, which will then offset future gains. So now you see this UBIT tax isn't so bad. We just have to examine each transaction individually and address it accordingly. In addition to debt finance real estate purchases, you may also incur UBIT when you invest in an operational business that is conducting an ongoing trade or business. It's not in all cases, but if you invest in an LLC, limited partnership, hedge fund arrangement, or other entity that does not pay corporate tax, you will likely incur UBIT. Now, further examination is required, and in just a moment, we'll discuss how you can obtain additional information to determine whether your IRA or other tax-exempt account is responsible for paying this special tax. I want to quickly go over the Form 990T filing process for transactions that incur UBIT. First, you must determine if your investment generates unrelated business taxable income, which again we just discussed. Then you must determine how much UBTI is generated and if it's more than the $1,000 specific deduction allowed by the IRS, or if you wish to carry forward a net operating loss to offset possible future gains. We need to also take that into consideration. Next, if UBIT is owed, your IRA must obtain an EIN number as a business ID that is used for tax filing purposes. The Form 990T is filed under the EIN, and any taxes due must be paid from the IRA or other tax-exempt account that is being used. Next, you prepare and file the Form 990T and any additional applicable tax schedules. Finally, you must determine if your state requires UBIT filing in addition to the federal tax filing. Now that you have the basic understanding of UBIT and UDFI, what are your next steps? Well, if you know that you have incurred UBIT or will incur UBIT, you have three choices to comply by filing the Form 990T. First, you can do everything on your own. Second, you can hire a CPA or other financial professional to do it for you, or you can enlist our services to assist with performing the calculations and tendering the 990T and all other tax forms required. Did you know that the IRS website estimates that it could take over 140 hours to stay on top of UBIT on an annual basis? If you're analyzing a transaction that you feel might incur UBIT, unrelated business income tax, and you need more information on how to go about calculating the estimated taxation, download our free white paper today. This white paper will reference examples and calculations that will help you formulate a plan to address any UBIT activities. Thank you for joining me today.